Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, good morning.
Hi, good morning, folks. Everybody, welcome back. Welcome back to our viewers as well after the weekend. So plenty of sporting action and plenty of tariff action. Basically an action-packed weekend.
Indeed, and Monday is not going to be short of action on the sporting front at least, because India needs to chase down 135 runs, and it's the test match is quite interestingly poised. So let's see how that goes. But I'm sure, Prashant, you enjoyed the Wimbledon final last night. The best in class tennis we saw last night.
Yeah, but it was a four-setter, but I only found out who won this morning.
Oh, really?
Guys, I must go to sleep, get some sleep.
Oh, very good.
But I think 2.5 sets in, I kind of But and it was looking like Alcaraz was playing better, just playing better.
Yeah.
But of course, I mean,
he had his chances.
But it's Sinner.
But speaking of chances, that's what Mr. Trump is saying. The EU had its chance. Mexico had its chance, but they didn't play ball. So he decided to do what he thinks is right.
Yeah, 30%.
30%.
Right? So, let's just take it from the top, straight up in terms of the action, the news flow, and of course the market reaction as well. So over the weekend, President Trump declared a 30% tariff on EU and Mexico effective the 1st of August. So this is the new thing which markets have woken up to. On Friday and over the weekend before this news, I think this was one of the top things markets were expecting to come through during the course of the weekday, but it's come over the weekend. But he's left the door open for adjustments. That's the important bit. He's left room open for adjustments. There are, by the way, comments from EU's top officials saying that they will continue to negotiate. There is the the president of Mexico, who's also on record to say that he hopes that they'll be able to avert these 30% tariffs, etc. By the way, the U.S.-Mexico bilateral deal is still effective. So any trade which takes place under that UCMA, that's still valid. These tariffs will not apply to that. That's very important, especially for the auto sector. But this 30%, why does this matter? These are significantly higher than the 10 to 20%, which was the expected outcome for these countries. Now, the market reaction is quite muted. You look at the euro, which is down, but down small. You look at the dollar index, which is up, but up very small. U.S. futures this morning, about 2 hours back when I looked, they were down about 0.4%, S&P, Nasdaq, etc. And gold prices were up about 0.4% or so. So, they're largely holding. But these are very muted reactions. EU is by far, after China, the biggest trading partner for U.S. And U.S. is saying, well, here's 30%. Well, the market's not reacting in that sense, right? And I'll just get to that in just a bit. Just to finish that point off on precious metals and gold and silver, this was the Friday move on gold and silver. 1% on gold, silver prices were up nearly 4%. And by the way, market reaction on Friday is largely been muted. Actually, there was just two things. One, precious metals, which was strong, and then it was oil, which went up about 2% or so. But focus squarely is back on tariff policy. And there's no doubt about it. So just to go back last week, before this weekend tariff announcement, Trump issued 22 letters last week. And most of it was to Asian countries. And guess what? Market reaction once again was muted. So Asian currencies were lower. If you look at a range of currencies, including the Thai baht, Indonesian rupiah, etc. But they were not dramatically lower. It was a muted reaction. So what the market is expecting is that Trump will back down once again, or he will further extend the 1st of August deadline. And that is the reason why they're not reacting, not to the weekend announcement, if you can move it along, not to the weekend announcement or to what happened last week as well, as the August date approaches. So this is the point. The question, though, is this a big risk, right? The fact that the market is once again expecting Trump to fold in a sense, right? Essentially saying that he's going to back down or extend. Is this a big risk, and does it kind of smell now of complacency as far as the markets are concerned? Will 1st of August really be, in that sense, the day of reckoning? Because Trump is on record to say, well, we're not going to change it. It's a final deadline, although there is room for negotiations. So I think that is broadly the bent of mind that I'm going with, that maybe with 15 days to go to the 1st of August, with the market not reacting once again to what is being said, there perhaps is a little bit of complacency, global market-wise, which is kind of setting in. The other bit last week, of course, was the 50% tariff on Brazil. And you've got to ask the question, does that also set a dangerous precedent? The reason I'm asking that, the reason I'm saying that is because, if the letter to Brazil was not about matters related to economy. He widened the scope to what the prior president has done, et cetera, et cetera. So could that... tariff policy was used to fix the deficit, but could it now be used for other things as well? So that's the sort of other bit in that sense. Of course, the question still remains up in the air. What will be the end state effective tariff rate? After all is said and done, will it be 10%, 15%, 20%? Consensus was somewhere between 10 and 15, but I think after last week and over the weekend, that number perhaps should be repriced higher. Will markets do it, or will they wait for it to actually go through? Just to tie in the levels here, Friday was a disappointing day because early on the market hit the 20-day moving average. There was a bit of a bounce, and then we kind of sort of sold off in an aggressive fashion. We ended about 200 points lower. The break of the 20-day on the Nifty on a closing basis opens up the risk of correction to the 40-day exponential moving average, which is 25,018. That's the level for the Nifty. Upside levels, of course, we'll continue to put out the previous highs, etc. Bank Nifty, by the way, has not yet closed below the 20-day moving average. If the Nifty Bank also has a close below the 20-day moving average, which is 56,692, the index can head to the 40-day exponential moving average, which is 56,097, 56,100 broadly. Just go with that number, just over 1% away from where we are on the Nifty Bank. GIFT Nifty will give you a quick sense of how we are likely to start, 35 points lower. Surabhi.
Prashant, complacency is a word that Jamie Dimon used last week as well. Describing the market's reaction to all these tariff headlines, because the headlines are big. When you have 25%, which came in, of course, last week on South Korea, on Japan, these are large trading partners. And now the EU and Mexico are the top two trading partners of the US. And the number has been set at 30%. The market perhaps still believes that it will be negotiated lower at some point. So the market is not too perturbed from the looks of it. If you look at Asia this morning, and it's not like there's a major slide or anything. Japan is showing a little bit of red, 0.3% lower on the Japanese Nikkei. Other markets like Hong Kong are actually flat to largely range-bound, so no major cuts coming in. The EU and Mexico put together, by the way, contribute to a third of US's imports, total imports. So these are large blocks that we're talking about. Now, why is the market perhaps not too worried right now? It could be in the kind of statements that are coming in from both Mexico and from the EU. I just want to quote here the European Commission President, Ursula von der Leyen. She says imposing 30% tariffs on EU exports would disrupt essential transatlantic supply chains to the detriment of business, consumers and patients on both sides of the Atlantic. And then she goes on to say the EU remains ready to continue working towards an agreement by August. This is what the market seems to be focusing on. But then she does end by saying that we will take all necessary steps to safeguard EU interests, including the adoption of proportionate countermeasures if required. So let's see. Market's still thinking that this will be sorted over the next 2-3 weeks, and the ultimate number will not be as high as 30%. We'll see if the market gets it right or not. On gold, by the way, just to add to Prashant's point, that 1% rally that happened on Friday and almost 1.5%, depending on whether you're looking at futures prices or spot prices, there is an add-on that's been built in because gold is up this morning as well, marginally higher in Asian trade. For us, it's been a week of consolidation, and consolidation that started giving way to downside bias, and that's showing up in the flows as well. Look at the cash market flows, quite weak actually, especially the FPI numbers on Friday, over 5,100 crores of selling. Domestic institutions were offsetting it to the extent of about 3,500 crores, but that FPI number was a big one. Today, in terms of our macros, the CPI number is going to be in focus, and the estimate is that consumer inflation in India will fall even further. Remember, the last print we had was 2.8%. After years, our inflation number had fallen to sub 3%. Well, guess what? it should fall to about 2.5%. That's what some of the polls on the street are indicating. As always, earnings season has started. There's going to be a lot of stock-specific action. So I'll just leave you with some samplers. Remember, we were telling you this on Friday that there could be a deal brewing with the VIP, and it's finally come through. Promoters are exiting the company. There is an open offer that's going to come in at 388 rupees a share. So watch out for this stock. Divi's, there's a negative development for Divi's. And that's because they were supplying APIs to Novartis for an important drug, Entresto. But now Novartis has lost a patent case. And the other company, MSN, is going to be launching a generic in the market. So could this, skew the pitch for Divi's? That's what some of the broker notes today are indicating. And more news from pharma, Wockhardt. Wockhardt is finally looking to close down and sell off its US generics business, which was loss-making. So maybe people see this as a positive sign that finally there's restructuring and you look ahead. So as always, lots of individual stocks and, of course, Q1 earnings that will be in focus. Nigel?
Well, that's right. If I look at the setup, it's quite interesting. And the sense you get is maybe we're nearing to the near-term bottom after the pullback from around 26,000 to around 25,000. So a technical bounce may not be ruled out. To be fair, even in Friday's trading session, after starting off with a cut of around 150 points lower, we pulled back to minus 30, 40 points or thereabouts. And then we gave it away. And the reason I say that is because the FI net short positions are now at 1 lakh contracts. The PCR has come down. It was more than 1. It's come down to around 0.76. And now in the near term, the Nifty resistance will come in at around the 20 DMA. So that's the way trade is set up. Let's focus on what the FIs did first. You already told us what they did in the cash market. Well, in the futures space, both on the index futures as well as on stock futures, they added short positions. So if you look at the index futures, there was some long unwinding, short addition out there. And even on the stock futures, well, there could be some arbitrage at play out here. But there were shorts that were added. As I always say, shorts in the system, not such a bad thing. That could give you the reason to see a bit of a bounce. So FIs have been adding the shorts on. How are they positioned right now? Well, if you look at the way the contracts have moved up, when we started the series, well, the net short positions were only around 30,000 contracts or thereabouts. That number's moved up to around 1 lakh contracts. So that's the trajectory. And the clients, they were mildly net long. Now, in fact, the long positions have moved up to close to around 70,000 contracts. So both those two data points, actually, this combination hasn't been so bad. In percentage terms, the FI net short positions have moved to around 80%. And normally at around this 80-85% or thereabouts, that's where you see a bit of a bounce. The 1 lakh contract mark, that's normally the mark where you see some kind of bottoming out just in the near term. It's a technical level from where we see a bit of a bounce. Moving to the options data then, we had the VIX, first of all, that, though the Nifty has pulled back, the VIX is still at multi-month record lows. So just keep an eye out on that, and that's actually a good sign. As promised, let's go to the options data then. The 25,300 call, 25,200 call, both of them saw aggressive writing. And that's the reason why the PCR has come down, because the call writers, they feel that they are in the game. However, the 25,200 put as well did see some kind of addition out there, and there was a mix of activity at that particular level. There were writers at play as well, which tells you that 25,050 odd mark should be a level that the bulls would like to defend. The PCR as well has come down a little bit. So let's get down to the levels then. The Nifty, two important levels that we will be looking at. But in today's trading session, you'll first want the Nifty to make a higher high, because in the last few sessions, we're making lower highs, lower lows as well. So 25,322. However, the 20 DMA comes in first at around the 25,260 odd mark. So that's the first technical level that you'll want to get past. That's important. And on the downside, the 25,000 mark or thereabouts, that will be the line in the sand for the bulls on the downside. The bears, well, they will want the Nifty to break past this level. The Nifty Bank as well, that saw a bit of profit taking last week itself, but that will have to lead the way from here on. So we're still defending the 20 DMA, still defending the 50 DMA. You wanted to continue to do more of the same on that front. The big deal that was announced yesterday as CNBC TV18 had broken is VIP. Well, the stock actually has relatively outperformed Safari, in the recent past. But I'll be watching VIP because, the price has been done at a deal which is much lower. So maybe that stock is under pressure. However, Safari could continue its outperformance from here on, because the promoter changing hands will tell you that price rationalization will come about. Some of the discounts as well will go away, and it could be good for the industry on the whole. So Safari is the stock that I'll be keeping on my radar.
All right. Well, Safari and VIP, all about luggage and travel.